Good afternoon. Welcome to the GTH weekly live stream. Thanks for attending. It's funny, every single time I do these, if for anybody who's not familiar with like setting up OBS or this streaming software, like every single time I come in, it's like my monitor never wants to work. My like plug-in monitor. So somehow, some way, I always get it to work. Anyway, let's get to it. Today we're going to go over some like higher level market dynamics. I'm going to talk about the Dow Jones, about Nasdaq, and the S&P. And the reason is because there's been so much craziness in the world, right? Geopolitically, the macroeconomics, the headlines and the news and the disjointedness, the separation between this like crazy polarization between, citizens in the country and whatever. And I'm, not that it matters politically, but it matters from the perspective of the stock market. So it's worth talking about it because we've seen so many things happen here. So I'm gonna talk about all of that, and I'll also mention that if you've watched any of these in the past, you know that I'm a math person. I have a math background. I'm very heavy on the technicals, and today we're going to talk a little bit more about kind of some fundamental things, right? Like some kind of current events that influence the market. And so, I don't give a lot of that out because it's not, my brain doesn't work as much in that way, but it's super important right now. The technicals matter, but the headlines and like the variance on the fear gauge, right, has just been kind of like the most dominant characteristic lately. And so that's why we're going to talk about it. I'll also mention that you could talk about this stuff for hours, right? So like if anybody's really interested in the index level view, like either reach out and we can talk more about it if you have questions, or there's tons of material. Like there's, you could probably watch for hours people breaking down the indices on YouTube videos like this one. So there's a lot. So we're not going to go over it. We're just going to hit like the high level stuff so we can kind of understand what's going on in a short period of time and, use that for like trading in the future. And that's that. So, okay. So we'll start out with the Dow, and on all three of these, I've put up these lines. So there's these three vertical lines. And you notice on these lines so this first vertical line here is when the U.S.-Iran war started. And it actually didn't start on March, down at the bottom, you see Monday, March 2nd. It started on February 28th or something like that, right? But like Monday, March 2nd was the first day the market was open after the war started. So we've got this one, and it'll show up on all of the indices that we look at. And then this next one is when the ceasefire went into effect on this guy right here, and then the April 8th, the April 8th one is when the ceasefire went into effect. And so and we'll come back to that March 30th one. But so this, you can see on this one right here where, the market jumps after the ceasefire comes in, right? And here where the war starts, there's this big drop. So, so these are kind of like major events here. And so there's this purple curve, right? And so what I'm going to do is I'll back out here. And this purple curve, I didn't put this on, we'll look at it on the other ones, but this purple curve is like super kind of way high level, right? Like this is, I started this curve way back. It goes back to the 1970s, right? And the reason I drew this is because really, if, when we zoom in here and we look at these small areas, there's a lot of variance, right? Like between a lot of standard deviation away from that curve. But when you zoom out, we got to keep things in perspective, right? Like we always talk about the market goes up and to the right, and it doesn't just go up and to the right. It goes up and to the right exponentially. and it's still doing it, right? Like we have wars and we have like, recessions and we have like big booms and all of these things that happen. But at the end of the day, you can see here that the market has followed this curve for, like I said, 1970, right? Like, so the better part of like 50 something years. And it's going to keep, unless, society as we know it literally fails, it's going to keep doing it. And so we got to try to keep our fear levels, our worries there in check, because if it doesn't end up following this curve, then we have much bigger problems to deal with than whether or not like we're making some money on the stock market. So zooming back in here, and we're not going to see this with the Dow, and so I'm going to move on from the Dow real quick. But you can see like and in the short term, right? So this linear regression here starts May of 2024. We're still on a pretty good trajectory. Like we've had, if we go back so this is Liberation Day. This lower area over here is Liberation Day. And so we had like a negative 2 sigma plus event there. But then we came back in, and even when we look at the start of the war, right here, it's not, we're not talking about major drops here. Like if I measure this drop, if I go down to day here and I measure this drop, we can take a look at what's from the start of the war right here. Actually, we'll put it at the top. So the start of the war right there, down to the low is like negative 7.8%. And from the very top, which was before the war started, we're at like negative 10.7%, and that was the correction we were talking about. So, in the past, right, like when we were down. But this is not. I mean, we're not talking about major stuff here. Like this isn't major problems. And of course, if I go back today, we have the linear regression slope is slightly negative, but that's indicative of the fact that we've got this huge retracement downwards. Like if we keep retracing up, then this very quickly this linear regression is going to correct itself. But on the weak candles, this kind of like bird's eye view, we're actually not bad. Even if we see a further drop here, it's a big problem. Or it's not. I'm sorry, it's not a big problem. Not in the grand scheme. So I'm going to move on from the Dow, because I want to talk a little bit about the S&P. And so I drew some lines here on the S&P, and in fact, I'm going to back up a little bit out of here, and I want to show you a couple of things. And in fact, you know what? I'm even going to just remove this line for the moment. So these three yellow vertical lines, even though, and I want to go back to this one in October, and we're going to see the same thing in the Nasdaq. When we look at the Nasdaq, I've got this same vertical line there. So what's happening is we saw like a major growth at the end of last year, when like after the kind of the tariffs disappeared and whatnot. We saw this major growth up until September, October timeframe. And even though October here isn't a high, I could list off, I could look at 15 or 20 different major stocks on here and say, okay, look, this is, and in fact, I'll just choose one here, and hopefully, I think this is Microsoft. Yeah, okay, so look at Microsoft. So like if we go back to August, September, October, look at these highs. We've got these big highs in Microsoft. First one here was back in end of July, and then the second one was at the end of October, and it has been a slide ever since then. And there's like 15 or 20 or I don't know how many stocks that follow that. But so if you go back to like January, in my brain, I was saying, oh man, like we're not going down fast. Like it doesn't feel like a lot, but like something's happening, right? Like the market is slowly just like sliding off. And so we see that a lot here in Nasdaq. And again, like it's not higher than the highest high, but it's this very high value at the end of October, and it's this composite, right, of all of those kind of tech stocks. And And so then we see this slide, right, from the high here, kind of in this direction, right, of that linear regression. But then looking back here at these curves, and again, I'm going to just get rid of this one for now. So because these two are really the relevant ones I wanted to talk about. So ultimately here, what we have is we see the Nasdaq slip. We see it slip way down, and then the peace talks come in, or the discussion about them, right? Like there wasn't an actual event here; it was just the discussion, and then the ceasefire happens on the 8th. So what matters here is why is the market now, like we're up at this area, and the ceasefire has been extended, and so we see this big green thing, right? But like the fighting, we're still in this area where fighting could be like a major concern, right? And so why is the market not reacting to that, right? Like why are they like? And so I think what's happened is that people have said, well, on both sides of the fence, we have absolute Looney Tunes going on with regard to social media and what's happening, and one day it's we're gonna fight, and the next day it's not, and it's all over the map, right? And so I think people have kind of said, well, I'm not really paying attention to that as much as I was before. And so we're continuing to see these highs. But the problem here with this is this either continues and we find a way to, get out of this whole thing, or if we start fighting again, if we start blowing stuff up, we're going to see this drop again. We're going to see this big drop. And so I drew these curves here. I have these purple curves that I drew. And I'll tell you guys, I love trend curves. Like trend lines are really nice, but trend curves are the best because they really like they give us something that's more real than than what we've seen, what we like experience with lines. Like it's more real life. That's reality. So. And you can see how in here, so we're going more towards the technical side now, and we will be for the next minute. This guy, we've seen a lot of this, these bounces, right? Like if we move back where I started this guy, we see like potentially 1, 2, kind of 3 right there, 4, 5, 6 areas where it bounces off the high end. And we see 1, potentially 2, 3, 4, 5, 6 areas where it bounces, and then this one big area where it breaks through, and then it retests and it comes back in. And so this curve, if things continue the way they are, this is a very possible curve. And I can share this with anybody who says that they want it, they want to see it. But this is a possible curve now for behavior of the Nasdaq, if in the case that no crazy headlines come out, right? So that's worth taking into account. And then additionally, you can look at things like we can look at the moving averages, and those are hard to look at such large time scales here. So we zoom out and we say, okay, well this feels pretty bullish on Nasdaq, right? We've got Nasdaq breaking up very strongly above the 5, 10, 20-day MAs. And this is as a day trader, like this is like an interesting thing that happens here, right? Like down at the bottom here, you see this come up, it tests this average, this 20-day, and it breaks it, and it comes up, and it tests again, and it comes through here all the way high. And had you bought this after this test right here, you can kind of watch the moving average create itself as the stock goes up, and you could just ride this whole thing up. And then even when it tests up here at the top left, that's an area where, well, maybe that's the time to sell, but it bounces, and so maybe not. But all of this stuff right here, all of this stuff since April 8th, right, when we had ceasefire come in, this is not technical movement. Like this is totally comprised of a movement that is more headline based, right? More fundamental. So it's hard to work with that. So then if we look here farther and we see this, there's this the 50, 100, 200 day, same thing, real bullish movement here, right? But it doesn't necessarily mean anything. Like what it means is that people are kind of correcting back up into a place where I think they thought the market was what it was worth, right? What they priced it at prior to all the war stuff. Like, but so this isn't technical movement, right? Like this is kind of headlines. But it's still bullish, right? We're above, and then even if we look at the exponential moving averages, it's all above that, right? It's all above that. And then one thing that you guys might keep in mind as you're going through this, and I don't look at them a whole lot because I don't trade at the index level. But here, like if we take put on a Fibonacci extension here, so like let's see. Where is it? Fibonacci retracement. So in this case here, what we're saying is, well, and I'm going to go to a day chart. Whoops. And ultimately, what we're saying is, well, if the market continues in the way it is, or if it drops, let's say there's a war, right? Let's say we go back to war and it drops, and we come back down to about this level that we were at before. That's the retracement here. These Fibonacci numbers. It's a lot of mathematical stuff, and very simple math, but it's a little more relevant when we're talking about an aggregate. Like a lot of people are following these, and because an index has a much lower variance, right, than an individual stock, people follow these a lot with the indexes. So you might consider looking at those when if you like to trade SPY or something like that. So that's the Nasdaq. It's kind of an interesting look here. And like I said, we're not setting up any trades. We're just kind of like looking through this and seeing where things can go here. So let's go to the SPX. Let's go to the S&P. So again, if we look back here, I'm not zooming in very well today, am I? Same thing. This October time frame, like it's not the high, right? It's not an all-time high for the S&P, but you can see that if we go back to April of 2025, how we've got this huge upward, kind of thing, and I could draw in a curve here even for that if I wanted to. Now I can't even find where the curves are. They're eluding me at the moment. I can never find them in these menus, and it's going to drive me nuts. Give me 1 second here because they're in here somewhere. There they are, curves. Okay, so here if I put in a curve, like you can actually, and if I attach this guy, there's a nice curve to be kind of drawn here, like this big, and this is kind of a nice curve right here because you can see that it really illustrates how the growth was nearly vertical in the beginning, right? And it kind of tapered off and almost up here kind of goes hyperbolic in this on this angle. So anyway, I drew these trend lines on the S&P, and here's the high. The high back in October, not the high like the all-time high. We retraced down to this point where we hit this bottom trend line, and then we retraced back up, right? And so that puts us into January when things were going decently. So we had this retracement back up to here, and then we have another big retracement, a bigger retracement down, and then yet a bigger retracement back up to the top, which is where we're at right now. And so if we talk about war happening, and we talk about what the result is if we continue fighting in this war, there is a possibility, right, that we end up seeing this test back down, this trend line down here, right, down at like 62.40, if it continues long enough, right? And like that's a big if, but like if we go back to the Iraq war, than, was that like 2003 to 2010 or 2011? Like that was like we were supposed to be in and out, right? And it lasted like 8 years or 7 years or something. So, there's no telling, right? Like it doesn't seem like it'll last that long, but even if it lasts 6 months, that could put us back down here, testing this trend line. And, as a slightly better case scenario, we could look at from where we're at now, bringing it down to the low before, and that's an 8.46% drop from where we're at right now. And, before we had, and to even get in a little better of a scenario, we had a 5.46 drop. So if we take that 5.46 drop and apply it to where we're at now, that puts us in, in the middle of this thing, almost right there on the average, the actual linear regression line. 5.46% puts us right here on the average linear regression line that we have in between these two sigma bands. So those are some scenarios, right? But like the point of all of this, there's this technical analysis, and we can look at the 5 and 10 and 20, and you notice where actually the 5-day is keeping up with it right up there. But if we look at the larger, the 50, 100, 200, and of course with the indices, the 50 and the 200 they're the big time, right? Like that's where we really are focusing on the indices. Like those are the really, really heavy ones. But we can see how bullish this is. It's like, and in fact, with all this like headline driven trading, we don't, the indices almost don't even care at that index level. They still don't care. Like it just crashes through. It does test, right? You can see it test a couple of times, but then it doesn't even have any regard. It just goes crashing right through these moving averages and on up. And that's why these details, these geopolitical details are so important right now. So, so looking at that, we've got that. We just pull up the exponentials. It's bullish on those as well. And so, but the point here from all of that is that if we can stay out of this war fighting situation, then this kind of, we kind of probably, let me see if my zooming is so bad today. Then obviously we're not going to go up at this kind of angle forever. It kind of levels off right here. And again, we can draw in one of these curves, which really are so nice for this type of thing, right? And so we could almost do a curve, put in a curve that kind of looks like this, and this fits pretty well. But it gives a little bit better of a view of what we might be looking at if we, there we go. Now we can put that in the center of the screen. If we don't experience any more, major hurdles here with these geopolitical events, then yeah, it's very likely we do see this grow, because people have had this fear and they're almost like so psychological. They're almost out there like, oh, it's ending. Like I'm going to go out and get back in, and the stock market's healthy and everything is good. And so, but on the flip side, if we do start fighting these, get back into the war and the job situation doesn't improve, here in the U.S., then we see a very different curve, right? We see this curve. I don't even know if I can draw a curve like this. Let's see if I can do this. We put that here. Then we see a curve that looks more like that one. And where this thing ends, whether it ends here or whether it ends, on this line, like there's no telling. But it's so politically driven like that. Like we're in a real bullish state. And so, here's the thing, like here's the takeaway. So I don't know if that analysis was helpful at all, but here's the big takeaway. Here's the thing. We have to be careful with trading. Like this is not this time we're at right now. This isn't like, a new golden bullish market where everything is soaring and like this could change we know how this sort of thing goes. Like one day everything's fine and then we're bombing, or one day, we're gonna destroy blow Iran out of existence, and then the next day, we have an indefinite ceasefire, right? So like this sort of thing still has a major bearing on the market. So we have to be careful. Like we can use these, we can come in here and we can be like, okay, well, if I'm if I'm trading, like I can see this, this type of movement here, this, in order to hit the 50-day, I've got to drop down, where are we at? Like about 5%. And so that's a decent buffer, right? And we can talk about that with SPY, or we can talk about what the impact there is, how that translates to an individual stock in the S&P. But the real issue is that this is not a heyday for making massive money on the market. Now, this has been a super, super good week. I think I'm like 1.9% gain said and done for the week. Like I don't have to worry about, I've already closed everything. I don't have to worry about any assignments and whatever, like for the most part, like that's just said and done. So like this was a super, super profitable week. However, that does not mean that this is just take profit time. Like we have to be careful and diligent about the way that we're making trades. We have to take the technicals and keep them in mind and add buffer and risk management to that more now in some cases than we did when we were down at the bottom here. So in any case, that's a little bit about the three indices. As a quick note here, you can see at the moment that the ES1 is the S&P futures. We've got NQ1, which is these are the 1 month forward futures, the Nasdaq futures, and then YM1 down here, the Dow futures. And you can see that they're all at the moment, the S&P is negative, a little slightly negative, the futures. The Dow futures are negative 3.6, and Nasdaq futures are just like barely hanging on to their green. So and if you look down this list, you can see most of the stocks are red right now, which isn't surprising. I mean, I don't know if anybody saw Oklo today, plus 15.65%. Like that's a little bit insane, right? So although that's Oklo for you, so such huge gains today. But anyway, that's the thing. I don't know if the analysis is helpful at a higher level, but this is important. It's important to stay diligent here, and you do some of this analysis, and that kind of backs up things. But watch those headlines. Watch them. Make sure that you've got plenty of buffer on your area, on your trades, and if you can take a majority of the profit quickly on your trades, then just take it. Just take it and get out until things are more stable and we've kind of returned to some normalcy. I don't know, maybe we never will return to normalcy, but anyway, that's it. And it looks like apologies if anybody's put up any questions. The monitor literally went to sleep on me and I can't even look at him right now. So maybe I'll unplug this thing and plug it back in and see if I can pull that up. So but anyway, that's the spiel on this. You probably won't hear me talk a whole lot more about the fundamentals a lot. So that's kind of where we're at here. So anyway, if there were any comments or questions that I didn't see because of my monitor, go ahead and leave them as a comment, and I'll answer them at any rate. Have a good week, everybody, and we'll talk to you next time, and take care.